again today. Why I want you to think that is a great thing. We're going to talk about various earnings that happened in the last 24 hours, the unemployment rate, and we're going to talk about Dave Ramsey and something he got right on July 14th of 2022. Folks, let's get into it. It's the daily financial news for Thursday, August 3rd. Thank you for being here. We do this thing live because I want you to see what is going on in the morning. What we have here first is higher rates. The 10-year note is screaming higher this morning. Undoubtedly, this afternoon, we will see once again that mortgage rates are higher. We are heading into the slow season. You have heard me talk with Brian Lebo, Beth Traverso, yesterday, Adrian Hernandez. It does appear like housing transactions is slowing down again. We are seeing days on market expand, even when new listings are still down 20 to 25% from last year. So how can higher rates be a great thing? We need to talk about that. The reason I think higher rates is a great thing is twofold. One is it makes it easier for you and I to find motivated sellers. As rates go up, two things happen. One, most people give up. I want you to hear that again. Most people give up. Second, sellers start to self-identify. What does that mean? Well, as rates go higher and people quit looking, open houses go dormant, activity goes down, and some sellers will A, take the market off, their property off, totally fine, but others will start to show as motivated sellers. So in short, step one of higher rates is a great thing, is you and I have a better chance to find motivated sellers. A, most buyers quit. Two, sellers start to self-identify. Now, why is the second reason why higher rates is awesome? The higher rates go, the more and more and more opportunity we have for seller financing. Folks, if you are in my course, How to Get Started One Rental at a Time, I want you to pull out your spreadsheet, step one of the course, pull out your spreadsheet, and I want you to understand the power of seller financing. I want you to execute these two steps this weekend. One, take a property that you like today, but is a bad deal. I want you to take that property at list price and do two things. One, I want you to assume the seller becomes the bank. So let's assume you go in and you do a list price offer, 20% down, but instead of an 8 or 9% mortgage, you get a 3% mortgage. What does that do to cash flow? And then second, and probably most important and will be most frequently used, most sellers won't be in a position to or even want to do 80% loan. They don't want to be that big of the bank. However, they might take a 20 or 25% second. Now, again, when you do seller financing, these are all things we go over in the course. I want you to realize you can work with the seller to work out a win-win transaction. What if you said, Mr. Seller, Mrs. Seller, I will give you your price, but you need to hold a second of 20% for 0% for 5 years, no payments. I will give you a balloon in 5 years. Okay, maybe they don't want that. Maybe they want some payment every month. Okay, great. What about a 2% payment on your 20%? Again, folks, higher rates is going to cause most people to quit and give up. There goes demand. Supply, it's going to become increasingly, as the days go by, supply is going to be increasingly full of motivated sellers. These next 5 months is going to be prime hunting ground for one rental at a time students. You are going to write offers that produce cash flow in today's environment. When people say it's not possible, that's because it's not possible for them. They don't have the education. They're not doing the daily discipline. They're not focused. They're not taking your shot. If you don't write the offer, I guarantee you don't get the deal. Remember the story from Brian Lebo last Thursday. Got a house for 1.1 on a 1.8. Write the offers. Now, let's be clear. One more thing before we move on. This is not only about price. Sometimes people hear me talk about this going forward and we all want to write disrespectful offers. Trust me, if your goal is to hold long term, sometimes it is better to pay their price but get your terms. Folks, if you're taking the course, How to Get Started One Rental at a Time, first, congratulations. Join the Facebook group. But these are the things that we talk about. Understand the spreadsheet. Understand how little changes affect yield. You can get a great deal today in your buy box if you understand how to A, what price point works, B, how to structure deals. Seller financing becomes increasingly possible the higher rates go. It's just a fact. So folks, buy the course, do the work, join the group, do all that amazing stuff. And again, if you buy the course today, I'll throw in $100 in free goodies. Why not? So buy the course, let's get started. Again, remember, if you are a student, I want you to play with your spreadsheet and understand seller first or seller second, how it impacts yield. So we had some earnings come out. I think there's a lot to go through, so we'll do these quickly. Qualcomm came out with week forecast, said smartphone sales or smartphone chip sales are down 25%. What might this mean for Apple? I think Apple reports after hours today, I think. We'll see what happens there. Robinhood beat earnings but missed on monthly active users. Etsy, weak forecast. DoorDash beat top line but missed bottom line, growing expenses. Zillow gave weak guidance. Clorox beat top and bottom. PayPal beat revenue and only hit earnings. Anybody else? Nope, nobody else. One more? Nope, that's it. So again, lots going on, more earnings, some big earnings from I think Amazon and Apple after hours today, which we will talk about. Let's talk about the unemployment claims again. We got JOLTS report on Tuesday. We got ADP report yesterday. We got weekly claims today. Tomorrow's the big day for how many jobs we created in July. Unemployment claims came in at 227. 227, still trending at the bottom end of the range. I think last week was 221, if memory serves. So again, you know, I think the Fed needs to see that number over 300. And again, we're down at the bottom range. We were up at 264 for 3 months, or 3 weeks, 3 weeks, not 3 months, 3 weeks. We haven't seen that in quite a while. International home buyers. I don't know if you've realized this, but there was a time where international home buyers were swarming the United States. That has clearly changed as the dollar has gotten stronger. International home buyers in the last 12 months only bought 84,600 homes. This is according to, I think this was a Realtor.com report. It might have been Redfin, but I think it was Realtor, sorry. International home buyers, again, 84,600. That is down 14% from last year, and probably most importantly, the lowest on record. This report goes back to 2009. I'm curious, if you were to guess what 5 countries bought the most homes, how many of the top 5 do you think you would guess? I would have gotten 2 or 3 of them. Let's go top down. So number 1, I think, is easy. I think most of us would guess China, and you would be right. Number 2 is Mexico. I don't think I would have guessed Mexico for number 2. Canada, number 3. I would have put Canada on the list. India, number 4. And number 5 really surprised me, Colombia. I don't think I would have guessed Colombia if I had 20 guesses. But yes, Colombia was number 5. So again, China, Mexico, Canada, India, and Colombia make up the top 5 countries where people are buying American homes. The real big question we have to answer ourselves for probably years to come, if not quarters to come, is the move-up buyer. How do we shake up and unlock the move-up buyer? I am seeing articles almost daily. This is why this topic gets repeated. I'm seeing more and more daily articles talking about 5%, 5.5% being the magic number to unlock home buyers. Now, folks, undoubtedly that will unlock some home buyers, but it's not enough. I mean, do the math. Just do the math. You have a 3% mortgage. You're going to go to a 5.5% mortgage, but the next home is $100,000 more. Do you really make that move? I don't make that move. I think we're seeing more and more articles from housing biased individuals basically trying to tell their people, their mortgage brokers and their real estate agents, hold on, it'll get better, it'll get better. Folks, transactions are flatlined. I just had a conversation with Adrian Hernandez that I think posts today. We took a look at Orange County. Now, Orange County is expensive. It's $1 million medium. I'm going to go from my memory. I think they closed like 1,700 homes in July. Right now, as of yesterday, they had about 800 homes pending. Now, think about that math. If you have 800 homes pending, as we talked about with Adrian, some of those are going to fall out because of appraisal issues. Adrian is talking about more and more homes in Orange County having appraisal gaps and falling out of escrow. But if you don't have a home in escrow today, it probably doesn't close in August. So I don't know about you, but if I was looking in my real estate market, I would try to figure out how many pendings we have right now, because August could be a really, really, really bad month for closings. Yeah, it could be a bad month. So that's why I think a lot of people are talking about this 5.5. I think it's 4.5%. Just, it's always been my guess. But the real answer to how to unlock the move-up buyer, nobody wants to hear. Time. Folks, if you haven't downloaded my 53-year spreadsheet, which I give away for free at my website, onerentalatatime.com, onerentalatatime.com, you are missing out. I did this the other day with the lumberjack. We went back to 1978. We saw interest rates rise for like 6 years. Transactions did not get back to 1978 for 11 years. I don't know. I know it's not fun. I know it's not exciting. I know it sucks. But if the answer is time, the answer is time. I don't know what to tell you. What I will tell you is good investors, great investors who do the work, you and I like this. It's slower. People are giving up. We can write disrespectful offers. We are okay writing a dozen offers and getting no counters because we do the work and we will only close good or great deals. So again, get the spreadsheet. You can see what I'm talking about. I'm going to give a shout out, a pat on the back, a Nailed It t-shirt to Dave Ramsey. Dave Ramsey did a famous rant on July 14th, 2022, where he basically took on the Crash Bros and basically said, you guys don't know what you're talking about. You're not in the game. You're some ridiculous doomer. Housing is not going to crash. And Dave Ramsey nailed it. He nailed it. Shout out, pat on the back. Good job. So I wanted to see what Dave Ramsey is saying today. What is Dave Ramsey saying today? Really two things. One, we need to get used to normal appreciation. 2, 3, 4%. The years of 20%, 2020 and 2021 are not normal. We should get used to just normal, boring appreciation, which again, if you follow my channel, you know I agree with 100%. And second, we need to get used to 6% mortgage rates. We likely will not see 3% or 4% mortgage rates. I again agree. Dave Ramsey and his experience in housing is coming through. It is showing that he is looking at the data, not emotions. So again, shout out Dave for that July 14th, 2022 rant. I thought it was very well done. He got a lot of heat for that. But he was absolutely right, and I love the fact that he stood up and said that. And then finally, yesterday I asked you guys for a favor. I asked you to check out my new channel, The Daily Financial News, which takes this live recording, gets added, I don't know, extras and cut-ins and all of that, and gets posted in the evening on a separate channel. You guys did a great job. If you want to go see it again today, support me. Check out the 10 or 12 videos that are there. I would thank you. What I promised you is if you did me a solid, I would do you one. So we will, yes, do another free event. We are going to do another free event about how I would get started today. You've seen me go through a rough draft of this with Ty last week. I'm working on it every day, trying to make it right. My current plan is I want to get through next Sunday, which is the 13th. I want to see how it flows, see what I need to change, and then I will schedule the second one. It will happen in August. No question. Might be the next week, might be a few days after, but it will happen in August. Second, when do you want it? So we've already done one on Sunday. I could try Saturday morning. Now keep in mind, I only record in the morning. I could do Saturday morning. I could make a big exception and do something Saturday, 8 to 10. Or I could try something during the week, 8 to 10. So what would be best for you? You can leave in the comments below, Saturday or weekday. Or if you want, you could say Sunday. I could do Sunday again. But I think I want to try Saturday or weekday. 8 to 10 a.m. That's the deal. 8 to 10 a.m. weekday or Saturday. Leave comments below. Let me know which one you would prefer. I would thank you very much. And again, can you believe it? We're almost 1,000 away from 50,000. We are 1,062 away. Like, subscribe, comment. Help this get more views. Ask your friends to join. We're almost there. We could get to 50,000 by the end of August if you subscribe. Yes, you right there. Hit subscribe. Help us get it there. And then finally, Angelina, congratulations. I think you said it's your 4th deal. Congratulations on your 4th deal. Your card will be going out in the mail. How to get started one rental at a time is changing lives, is helping people move forward. Again, I want you to remember how I opened this. The higher rates go, the better it gets for my community. We only do good or great deals. The higher rates go, the more people quit. They give up. The higher rates go, the easier it comes to find motivated sellers. You don't have to only get a low price. Sometimes terms are better than price. Folks, if you're in the course, please play with the spreadsheet. Take some samples. Understand what it would be to pay list price but get better rates. This is our time. Do the work. Peace. Take care. Bye.